Welcome to the deep dive. Today we're tackling cryptocurrency price prediction. It's, a huge topic, super important, but also really confusing sometimes.
Definitely.
You sent over some fascinating stuff. We've got this research paper using, some pretty heavy-duty tech to forecast Bitcoin.
Right, deep learning models.
Exactly. And then a bunch of articles looking at Stellar Lumens XLM, more in the short term, like around May 2025.
Yeah, more focused on recent analysis and market sentiment for Stellar.
So our mission today is to kind of unpack these different ways of looking into the crystal ball for crypto and see what our sources actually suggest for Bitcoin and Stellar.
That sounds good. It's a great contrast, actually. You have the academic data-heavy approach for Bitcoin, and then the more sort of real-time market analysis for Stellar shows the different angles people take.
Okay, let's dive into Bitcoin first then. This paper, Prediction of Cryptocurrency Price Using Time Series Data and Deep Learning Algorithms. It states right off the bat that predicting crypto is crucial, but, super hard.
That's the core problem, isn't it? The market's just so nonlinear, so volatile.
Yeah, and the paper says the old ways, traditional time series forecasting, the stuff based on predictable patterns or seasons.
Like retail forecasts, yeah.
Right, they just don't work well for Bitcoin. It's too dynamic.
Exactly. Those methods usually assume the future kind of follows the past in a straight line, more or less. But Bitcoin, it's hit by tech changes, regulations, news, even just, public mood swings. Simple models can't really cope.
So that's where deep learning comes in. The researchers argue these DL techniques are way better suited for this.
Because they can handle noisy data, understand sequences over time.
And pick up on those complex nonlinear connections that are, typical of crypto markets.
Precisely. And they didn't just look at one type. They tested 5 different deep learning models, which is quite thorough.
Okay, let's break those down. First up, RNNs, recurrent neural networks.
Yeah. Think of those as having a kind of memory. What happened before influences the prediction for what comes next. They have these recurrent layers.
Okay. Then LSTMs and GRUs, long short-term memory and gated recurrent units.
Right. These are like more advanced RNNs. They're specifically designed to learn patterns over longer periods. They tackle a problem called the vanishing gradient.
Vanishing gradient.
Yeah, it's where the model struggles to learn from information way back in the sequence. LSTMs and GRUs have mechanisms, gates, to help control the information flow and remember important stuff for longer.
Oh, okay. Gates, like little traffic controllers for data. The paper mentions input forget and output gates for LSTMs.
And update and reset gates for GRUs. It's all about managing that internal memory state effectively. The paper even shows a diagram for the GRU structure.
Interesting. What else did they look at?
Bidirectional LSTMs or BILSTMs.
Bidirectional.
Yeah, so instead of just reading the price history forwards, it reads it backwards too. Helps it get context from both past and future points relative to a specific time.
Clever. And the last one, KONV1D.
1D convolutional neural networks. These are often used in image processing, but here they're adapted for 1D data, like a time series. They're good at finding sort of basic local patterns in segments of the data.
Like recurring shapes in the price chart, maybe?
Kind of, yeah. Finding small, repeatable features in the historical data. The paper describes a typical setup. Convolution layers, pooling layers to simplify, then layers to make the final prediction.
So this wasn't just theory. They actually applied these.
Oh, yeah. They took real Bitcoin data from Kaggle, cleaned it up, selected the important features, normalized it, put everything on a similar scale.
Through data prep.
Right. Then converted it into the right format for time series analysis and split it. 80% for training the models, 20% for testing them.
The classic 80-20 split. And they ran all 5 models, RNN, LSTM, GRU, KONV1D, BILSTM.
They did, to see which one actually gave the best predictions on that unseen test data.
And how did they train them?
They trained them over 200 epochs. An epoch is basically one full pass through the entire training data set.
So 200 passes to learn the patterns?
Exactly. And they watched the loss, basically the error rate on both the training and a separate validation set. Seeing those errors go down over the epochs suggested the models were actually learning, not just memorizing.
Okay, so the moment of truth. Which model won?
Well, based on their evaluation metrics, they used RMSE, MAE, and R-squared, which are common ways to measure prediction accuracy.
Lower error is better, right?
And higher R-squared.
Exactly. Lower RMSE, MAE, and MSE mean the predictions were closer to the actual prices on average. And R-squared tells you how much of the price variation the model could explain.
So the winner was?
The LSTM model came out on top. It had the lowest error scores and the highest R-squared value during their testing period, which ran from late September 2021 to early February 2022.
Do you have the numbers?
Yeah, for the LSTM test results. RMSE was around 1978, MAE about 1537, MSE roughly 3.9 million, and the R-squared was 0.94383.
Wow, an R-squared over 0.94. That sounds really good. It means it's explaining like 94% of the price movement. In that specific test period, yes. It suggests a very strong fit between the LSTM's predictions and what actually happened. The paper includes a graph comparing the predicted versus actual prices, and visually, they track quite closely.
That's impressive. What about the others?
LSTM and GRU were the next best in that order. It kind of underlines the strength of those recurrent types, the ones with memory gates, for this kind of time series data.
But they did mention limitations, right? It wasn't perfect.
Oh, definitely. They were upfront about that. They only looked at Bitcoin's price history. They didn't factor in external things like, say, social media sentiment, news events, or how other cryptos were behaving.
Which could obviously have a big impact.
Absolutely. Real-world markets are messy. So they suggested future research could look into, more advanced models, maybe hybrid approaches, combining different techniques.
Using bigger data sets too, maybe?
Yes, larger data sets, maybe training for more epochs, and critically, trying to incorporate those external factors, like social sentiment analysis. That's a big area of research itself.
Okay, that's a fascinating look at the high-tech approach to Bitcoin. Now, let's completely switch gears to Stellar Lumens XLM and what the articles are saying about May 2025. Sounds like a different vibe here.
Very different. Less about complex modeling, more about current market analysis, technical indicators, and overall sentiment. And the outlook seems a bit cautious.
Cautious how?
Well, one piece points out that XLM hasn't really kept pace with Bitcoin or even some other altcoins recently, only gained about 2.8% in a month, where Bitcoin apparently jumped over 14%.
Not a great sign. Suggests maybe traders aren't that excited about it right now.
That's the interpretation, yeah. Weak trader conviction, as the article puts it. Plus, trading volume for XLM is apparently way down from earlier in 2025.
Lower volume. That makes big price moves harder, right? Less fuel in the tank?
Generally, yes.
Yeah.
Lower volume can mean less market interest, and it can potentially limit how high the price can realistically climb. It can also sometimes lead to sharper drops if sellers dominate.
The analysis also flags a specific price level, around $0.26.
Yeah, it says XLM is sitting just above that and calls it a key support level.
Support meaning like a floor where buyers usually step in.
Exactly. Historically, the price has bounced off that level.
Yeah.
So if it breaks below $0.26, the analysis suggests it could fall further, maybe towards 0.239 cents or even below 20 cents. Breaking support can be a bearish signal.
Bearish. Okay. And there was something about a death cross. Sounds ominous.
It does sound dramatic. It's a technical pattern. It happens when a shorter-term moving average crosses below a longer-term moving average.
Like recent price trends turning negative compared to the longer view.
Precisely. Analysts often see it as a signal that a more significant downtrend might be starting or confirming. The article mentioned the moving averages were tightening, suggesting this might happen.
Okay, so some worrying signs. But it's not all doom and gloom, is it? Are there potential upsides mentioned?
Oh yeah, definitely. They also map out bullish scenarios. If XLM can find support and bounce back up, breaking through resistance around 0.297.
Resistance being the opposite of support, a price ceiling.
Right, a level where selling pressure has historically emerged. If it breaks through that 0.297 resistance, the potential targets mentioned are 0.349, 0.375 cents, maybe even up to $0.44 or 0.495.
But that depends on volume and sentiment improving.
Absolutely. You need more buyers to come in and a generally more positive feeling about Stellar for those higher targets to be realistic.
One source flat out said the sentiment was bearish as of early May 2025 based on technicals.
Yeah, one source did state that. Based on their specific technical analysis snapshot on May 6, 2025, more indicators were flashing sell than buy. Gives you a sense of the mood at that moment.
Then there's another source with a very detailed monthly forecast for 2025. What did that one predict for May?
That source gave an average price prediction for May 2025 of about 0.226 cents. They also gave a range from a low of roughly euros 0.179 to a high of 0.285 cents for the month.
So an average below the current support level mentioned earlier.
Yes, according to that specific forecast. And interestingly, that same source predicted the price would actually decrease through the rest of 2025, hitting an average near 16 cents by December.
Wow, quite a bearish outlook for the rest of the year then. But they still mentioned a positive ROI for May. How does that work?
It just means their predicted average for May 0.226 is, was still about 10.6% higher than whatever the price was when they made the prediction. So buying then and selling at their predicted May average would yield that return even if they expected to fall later.
Ah, okay. Prediction specifics matter. And did they look even further out?
They did. That source projected a generally bearish trend continuing into 2026 and 2027, with average prices predicted around 0.122 and 0.1117 respectively.
Man, long-term predictions in crypto. Seems like a tough game.
It really is. Yeah. So many variables over that kind of time frame. Market conditions can change dramatically.
Anything else from the technicals? RSI.
Pivot points. Yeah, the RSI, Relative Strength Index, was apparently neutral, around 49.90 year. That suggests the market wasn't strongly overbought or oversold at that point, kind of balanced momentum-wise.
And pivot points. Those are calculated levels traders watch.
Right. Based on previous price action, they identified support levels around 0.255, 0.251 cents, and 0.243 cents, and resistance levels at 0.266, 0.274 cents, and 0.278 cents. Just extra points on the chart traders might look at for potential turning points or targets.
Okay, so wrapping this all up, we've seen two very different pictures. For Bitcoin, this intense focus on complex deep learning models like LSTM, trying to find patterns in historical data.
Yeah, a very quantitative, data-driven approach.
And for Stellar, at least for May 2025, it seems much more about reading the current market tea leaves, sentiment, technical levels, trading volume, a bit more uncertain maybe?
It definitely feels more dependent on immediate market dynamics and trader psychology. The Bitcoin research is trying to build a predictive engine from the ground up using past data. The Stellar analysis feels more like interpreting the current weather forecast.
So, what does this contrast tell us? Predicting crypto is clearly complex, but does the approach differ based on the coin?
It certainly seems that way based on these sources. The deep learning focus for Bitcoin might suggest researchers see enough historical data and inherent patterns to try and model it rigorously.
Like it's maturing, perhaps.
Possibly. Whereas Stellar's outlook, being tied more closely to immediate sentiment and technicals in these articles, might reflect its position, maybe more influenced by broader altcoin trends or specific news.
It's a fascinating question. Is it the maturity of the asset or just different ways analysts choose to approach prediction? And ultimately, how reliable can any prediction be in a market this wild?
That's the million-dollar question, isn't it? Or maybe the multi-billion-dollar question in crypto.
Definitely something for everyone listening to think about. How much faith do you put in the algorithm versus the analyst's read on the market mood? Food for thought.